Hello, welcome to another video by Indicator Vault. And in this video, we are going to go over the Volume Force Pro. You can see here it's got the panel down here at the bottom. And, as its name suggests, it does include volume into its algorithm. It also uses some moving averages and other price action, such as the open, high, low, and close of candles. And what that's going to give you is these buy and sell alerts here, these signals that are going to help identify when the next trend or impulsive move is going to happen. And of course, we can see here, the blue for the buy signals, red for the sell signals. And in this video, I just want to go over some simple ways, and other, technical confluences that you can add to this to help get into some trades, or even, confirm your bias for, a bearish move or a bullish move. And so I've actually added here, this line here is the 200 EMA. This is not part of the Volume Force Pro, but I've just added it here. And just a simple, thing like this, where if you have a sell signal like we have here, while price is below the 200 EMA, which is a very popular moving average to have to help determine the trend, then, something like that is just entering once this sell signal is here. If you wanted a tight stop, just put your stop right above the candle where the signal paints. If you wanted a larger stop, just find the most recent high, which would be up here. And of course, in this example, price closes. Let me zoom in a little bit. Price closes here below the 200 EMA, giving us some bias before the sell signal paints, that we could start to see some downward price movement. And we've got some lows here, this low here that we could potentially see price target. And then what happens? This next candle wicks up into it, closes well below, and we get that sell signal painting here. And of course, another sharp move, some consolidation shortly after. But after the consolidation, another strong move. And then we get another sell signal, wicking up, taking some liquidity above this candle, and then another strong move down, all while price is still below the 200 EMA. But while we're on this price action here, I also wanted to show another sort of confluence that we can use in this area here. I'm going to add a fib onto here. And so here we are. I've put the fib from the high of this candle, and while it's here, but just to draw it out, the low is on this range here. So one way you can use something like this is find the candle, if it's a high or a low that's intact still. Instead of just drawing a fib from the actual price action high, you could anchor it on the candle that the signal paints on. And then, of course, in this example, since we're bearish, again, since price closed below the 200 EMA, a move down. We have this low here, so we have our range. We have anchored the top on the candle that the alert painted on, and then on the low as it comes back up. And, in other videos I've stated, I like to really just use for Fibonacci levels to find a range of just premium and discount, or you could really just say oversold and overbought of the range. And so what do we have here? From this range, price moves up, pokes into the premium, and then tanks. And so this is just another, maybe entry method or way to, you know, filter out certain entries and maybe even exits depending on how you use it. If you're not comfortable, entering up here with just a stop here, you could wait for just a little bit more confirmation. Okay, we have this candle here showing some more strong bearish tendencies. So now you may feel more comfortable that, it'll start moving towards these lows here. So you want to wait till it retraces back into the premium side of the range, which of course it does not stay in here very long. And then again, if I haven't mentioned, this is the hourly chart for the S&P for ES. So just to zoom out again, we can see once it retraces back up into the premium side, another strong move down, some consolidation, and boom, another strong move down. A great sell opportunity here in just this example here from this one, just with some very simple price action concepts. And for some more examples, here on the Amazon chart, the 15-minute chart, and again here I've got a 200 EMA on, and price is well below. So we're kind of thinking downtrend. That's the we'll start off with that bias because it's below the 200 moving average. We see an alert here, but as we can see, this would be the next low, and naturally we can expect some retracements after, lows are taken. Again, if we're expecting a downtrend, a low, some retracement, again here, price takes this low, some retracement up, and, low here, retracement up. That's just how price, moves. So in this example, we have price below the 200. We get the sell signal, but we can see it takes, the low without really giving a clear entry or opportunity to get in. And plus, it's given the sell signal, even though this one was right, as we see price continue down. It's just kind of closer to this low already that we just need to be a little bit more cautious with how we enter. So, for something like this, I probably wouldn't anchor the fib on this high as in, I did the previous example. I'd probably anchor it on this high. Of course, we can clearly see it moves up into the premium. I don't need to put a fib on for that. But also, classic order block or supply demand logic will tell you mark out the zone. So I'm just going to put a line on the bottom of what I would mark out this zone as. Mark out the, zone that caused the push down with the signal in it. So as we can see here, a strong move down with a sell signal. So, and again, expecting a retracement, what can we logically expect it to retrace to? This supply zone up here. And of course, let me get my line a little bit more accurate. Barely touches here, but of course here with this gap up, or excuse me, this move up and then the gap down, hits it, all while being in the premium side of the range. And clearly we can see, quickly moves away, does not hang in this supply zone long at all, moves down. We're ignoring the buy signals because, again, our bias is bearish. We're only looking for sells, and that is going to give the highest probability of these trades working out. So then super strong move here, clearing out all these lows, continuing the downtrend. And just like I mentioned in the previous example, I'll put a fib on from here to here. And just like I did in the earlier example, find the candle that has the alert on it, wait for a range to form. So we see this low here. Price moves back up into the premium side of that range. Of course, tapping into this gap here. So many confluences, premium of the range, the sell signal, giving us, confidence that another down move is coming. Price still below the 200 EMA. And then that is exactly what we see. As I zoom in more, once it hits premium, just continues to drop. With some more, sell signals coming that would have worked out great. We're not going to cover them in this video. As you can see, the sell signals working out great in this downtrend. And if you're very nimble and looking to scalp, some of these buys would have been great to catch retracements up. But again, we're taking the highest probability trades with the Volume Force Pro. So I hope this video was helpful. And until next time, best of luck trading.